Hello, how are you? I am splendid, splendid. In a reflective mood today. Yeah, yeah, it's fun. It's fun. Very good, very good. Yeah, so people just filing into the room. We would start about 5 minutes afterwards, actually. So there's a lot of interest in this week's story. I'm quite surprised that we've only got 20 people here so
filing into
far.
the
I
room.
thought we were going to see much, much more, but let's see. We've a few minutes. Indeed, indeed. An interesting time in the industry. Interesting time. Every day is fun. I've noticed quite a spike on volume actually today on Foxify. A lot of people buying and selling options today. Mm, yeah, yeah, definitely, definitely some tussles going on between the Bulls and the Bears. My Dutch is pretty sparse. I'll be honest. The Bulls. Yeah, yeah, yeah. Absolutely, absolutely. It's interesting, isn't it? Because we've had a little bit of a downturn. The Bitcoin's dropped from it was in the 29 to 30 range for it seemed like forever. But it's dropped down and it's now struggling just to stay above 26, which is a big drop in a fairly short period of time. But all of I'm always a bit skeptical. I think I shared this last week. On there's been so much in the news around new Bitcoin ETFs and big money coming in, and there's nothing guaranteed in crypto. There is nothing guaranteed apart from one thing that I've seen, which is the unexpected always seems to happen. And so like for me, whenever I see the drums beating, everyone saying the same thing, all pointing in the same direction, for me that's always like a big warning sign. And I'm sorry. Yeah, exactly. I remember the opposite, and a similar scenario was at the end of 2022, and everybody was predicting 9K Bitcoin, and now we're like, Bitcoin's down, but Jesus, you think it's down now? Back in September, it was really rough. Yeah, 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 absolutely. We can get cracking. We've got a lot to cover today because we're going to spend probably about 15, 20 minutes at least of today going through a deep dive on the tokenomics. Actually, we've put our the way our token is designed, it's going to be distributed, and the way the way it will function, it's been designed specifically with the bear market in mind. Actually, I think the token game is a difficult space at the moment, and what we wanted to do is give people the most confidence possible that that they can, if you believe in the team of Foxify and you believe in the platform, the great thing about, I suppose, the way that we've been developing and launching the business is that people have been able to see us working actually, rather than just sort of the token popping out of nowhere. So if you've got confidence in all of those things, we wanted to put a lot of thought and a lot of effort into making sure we have a token that rewards sort of long term. We're in this for the long term, and we want to make sure it's something that people don't need to be looking over their shoulder too much. If anything, to bring that optimism back really within DeFi, where people can go into it believing big things are going to happen, and that's the way. You have to be realistic a lot of the time, but quite often we're always trying new things, and we're always pushing the boundaries, and we'll never. I don't think anybody is in this industry that isn't a bit of a dreamer, right? And so we wanted to create an environment where that we give everybody the best opportunity to dream a little in terms of the future potential. Cool, thank you. So bear with me a second. Need to bring up my trusty notes. So yeah, it's been a good week since our update last week. It was quite intense last week because we did a Friday and then we did a Tuesday. Uh, so the update's quite intense, but yeah, a lot of stuff's happened in the last week. Got some very positive updates today, actually. So yeah, we're kind of in that bit that we've been yearning for a while. So I'll kick off first with a development update, and we will talk. We've got a couple of big updates here actually that we haven't talked about previously, and then it's going to get super interesting. It's going to get super interesting from a roadmap perspective. So I'll cover development, and then we're going to go through a number of other things, and we're going to invest. Sorry, apologies. I'm just going to take a pause for a second, so I'm going to go and close my office window because there's a pesky kid crying outside here. It's really hot today, actually, so I've got the windows open. Bear with me. Yeah, yeah. All closed now. Although I've had to open the other window because it is pretty hot. Yeah, we've got a cornfield behind us, and I was on a call earlier, and it started to get really smoky in the room, and it's because they were cutting the corn. But yeah, so cool. All right, let's get cracking because we've got lots to cover today. So development update in the last week. So Perps is live in private beta. I'm so grateful for the efforts that the private beta testers are putting in. So the great work being put in by the individuals there. Updates at the moment being pushed daily. So I'm sure you can imagine in the background, it's all hands on deck in terms of identifying any bugs, any improvements, and big updates. I think there was an update a couple of hours ago, wasn't there? Today, I haven't been able to go through the platform myself because I've been back to back in meetings. But so today we've had another big update, and basically, you imagine we're just pushing updates to it every day at the moment, and we would expect actually to be in a pretty stable place in the next 20 to 48 hours with some of the tweaks that are being added. And obviously, private beta is all about testing under load, and then making your last minute changes as well, and then getting into a more static situation ready for public beta. So it's very different. Moving from private at the moment, it isn't real money that's being traded by testers. Um, I think this is really interesting. Actually, we found a lot more engagement on the options, and you would intuitively think that you get more trading engagement from people if they've got nothing to lose. But there's maybe a lack of excitement there as well. So it's very interesting to see, people's people's behaviours when they don't have anything on the line. Actually, you'd think that they would just go crazy, but I think everyone's trading with huge leverage, but but at the same time, there's maybe missing that little bit of spark of trading with real USDC. So we're pretty confident actually that we're going to be in a position where we are ready for public beta early next week, and but we've got a different consideration. Obviously, we still need to take some time to think about PLP and get that open, and obviously start taking deposits into the PLP as well. So our plan, I say plan, goal, I don't want to get hung for saying this, but or hanged. We would like to be in a position where the PLP is going live very early next week. So the guys are already working on front end updates for the PLP display, so that we've got that ready for the public beta. And yeah, so we need that first. So PLP will go live, people can deposit into it. If no one knows what PLP, if you're new here, you don't know what PLP is. We don't have a liquidity pool on the option side because it's peer to peer. So the liquidity is provided by the person funding the option and setting the rate for someone to come along and buy it. And because it's a floating option, it means that you can leave liquidity on there, and it'll basically trade autonomously on your behalf at the terms that you've set. Whereas for the perp side, you need liquidity for people to trade with leverage. Now there's a tractor coming around the back of my house, so I'm going to have to. I don't know if you can hear that noise. Yeah, no, it's a tractor. So yeah, it doesn't matter which way we go. There's noise. Bear with me 2 seconds. I'm just going to open the front window now. Yeah, you can't escape it. The tractor's so loud you can hear it whichever side. So all windows are closed. So yes, I'm in a sweatbox now. So yeah, so PLP next week. PLP is it's the liquidity pool that the traders are able to use for leverage, and you can earn up to 75% of the PLP. Of trading fees for being a contributor to the PLP. So the PLP is constituted of USDC, most parts are 55% USDC, 22.5% BTC, and 22.5% ETH. I don't know about you guys. I'm quite happy. I was a little bit nervous about launching the PLP with the market at a little bit of a toppy fade. I think around 30k Bitcoin, just for where we were. There was always the potential that you launch the PLP and then we've dropped what a good probably dropped a good 15%, right, in the last week or so. So that now obviously that would always be hedged with the PLP because only a small only minority percentage would be BTC and ETH. That provides upside potential, but also it means that PLP can depreciate, right? Because if those things move down in value. But we're all here because we're bullish on the market, and if you're bullish on the market long term, then you're bullish on Bitcoin needs. So personally, I'm quite happy to have seen the market move down a bit, so that when we do launch the PLP, that just provides even more upside potential long term for liquidity providers as well. So happy to answer any questions on that. Just an update, we did cover PLP Plus last week. If you don't know what PLP Plus is, we will be updating documentation and putting some things out. We're still exploring PLP Plus. Anyone that missed last week's call, but things are looking very, very positive. And from a timeline perspective, it's looking very optimistic as well. We might even potentially have the PLP Plus contract before we actually have the PLP. So yeah, that'd be quite interesting. So yeah, so we're in a very good spot. The Yeah, we've in terms of perps, we don't see any. The only other thing that could possibly would be a kind of an obstacle in the road is potentially the audit. So the audit, we're due sort of first pass, and I can see sort of developers and auditors deep in conversations all day today, just providing feedback and corrections and clarifications both sides. So that's always a really positive thing to see. I have had smart contracts audited before where you don't see that level of engagement, but actually all of our partners so far that we work with, Hacken, Certic, and Halborn, very engaged, very meticulous in terms of their work. So everything's looking fine on the audit side actually, and we've literally just got a message from the auditor saying we think that we'll probably do the final report by Thursday. Is that okay? And obviously, of course, it's okay because we need to do it right rather than do it at rapid speed. So yeah, we're in a super confident position that the audit will be completed in the next certainly this week, but potentially even in the next 48 hours, but certainly well before we're going to be in a position where the PLP is live and people are making deposits into that. So yeah, so perps, PLP, audit, there are critical items. We've also had a lot of work going on in the last week on APIs. Um, and we should be able to push out options APIs, and then we need to have the perps APIs ready for next week as well. So yeah, so a lot of work going on in the background across all of those things, but we seem to be in a fairly good place. There is then around just a highlight because naturally front end, back end, Solidity, every man and their cat and their dog and their nan is all focused on the perps, the PLP, and working on the audit and on all of the peripheral things that are necessary, like the APIs. So we have, naturally, then there's been a little bit of a build up of a few bugs on the option side. In the beta phase, we log them meticulously. By the way, in the background, we have like a daily bug report. They're all categorized P1, P2, P3 in terms of priority. So there's nothing that's kind of slipping off the radar. And as soon as we get into this settled position fairly imminently, then we'll be able to take one of the front end guys off, put them onto the options, and we'll just do a second round of bug sort of clearing on that as well. So yeah, but everything's in a pretty good place at the minute. Obviously, we'd like to have been in the place we're in right now 2 months ago, but from a technical standpoint, things look pretty strong right now. No question. Yeah. Yeah. Just to clarify, so Koftamas said that 30K is not a ceiling for BTC long term. Yeah, no, I wasn't saying that. I was saying it's a bit toppy for this kind of phase of the market that we're in at the moment. I think, a friend of mine asked recently, uh, when should I buy some Bitcoin? And I said my advice to them was you see it sneak below 25, that's a good spot. If you want to really wait, you could see whether it ever pulls back below 20, but you could be waiting and miss that, and be a very sad individual. You might get the opportunity. Personally, I think that that 20 to 30K range, I think at the moment 30K is probably a little bit toppy. I think things could improve maybe going into the autumn or maybe early next year. Current phase, I would say 30K is probably a bit toppy, and I think 20K is like very low end. I think there will be a lot of buy pressure. I think there's a lot of demand for Bitcoin under 20K. I think there's a lot of cash out there that is angry that it didn't get in when Bitcoin was under 20K last time. So I'd be interested on your guys' thoughts on that. Actually, feel free to put something in the chat if you agree, disagree. But that's kind of my take. So yeah, I'm very confident that we can be in a position where half of our PLP is pegged to blue chips and assets that can appreciate, and we'll be in a position in 2-3 years time where a 20 million liquidity pool organically can easily be 40, 50 million because of the way the market's developed. People want to buy 20k, want to buy 20k Bitcoin until it's 20k. Yeah, it's true. It's true. Yeah, yeah, absolutely. I love that image. I love it. Yeah, we know some of another project like that as well, don't we, at the moment? um, cool. Okay. So yeah, lots updated there. So we do have a big, juicy, interesting update. So USDC rewards. So one of the development items, obviously, we need to update the leaderboard, and we're going to take that opportunity. We need to update the leaderboard for the launch of Perps, and we'll be taking that opportunity to update the leaderboard. We'll be taking that opportunity to not only add in perps, but also to add in a visual counter for USDC rewards being earned during beta by traders. Now, we've had a conversation internally, and we've kind of kicked this idea around, and we've come to the decision that we are going to set the USDC rewards for perps. We won't change options because we don't want people to feel upset or emotional, feel like they've been cheated. So we'll leave options as it is. But for perps, we're going to change it to the top 50 traders by volume actually will earn USDC rewards, but 10% of all perps fees will be distributed across the top 50, and it will be distributed proportionally. Where the higher you are, the more you get. And we're even talking about potentially some guaranteed minimums for the top 10 traders as well. So yeah, so that should really focus that quite a bit more. Obviously, always open to feedback. We've made the decision, by the way, so it's we're not coming here to kind of to brainstorm the decision, but always happy to listen to feedback and input. So we'll be moving to top 50 on the leaderboard for perps trading. Will receive a share of that 10% part of USDC, and you'll be able to see it live. So every time you open, close a trade, you'll be able to see USDC. Well, every time anybody opens or closes a trade, you don't even need to be trading. If you're already in the top 50, then you'll see your USDC rewards increasing live. Any questions? Any questions? It's a few $1,000s. It's fairly negligible. And if you're sticking on till the end of this session, actually, I would stick around for the tokenomics review. I've got some really interesting stats to share actually, and so we're not surprised on the options, but we're seeing sort of like we're seeing a positive move in terms of numbers, but we don't expect the fees from options certainly until we go through this next phase of marketing leading up to the pre-sale. And there's a lot of marketing in the next 5 weeks, so you guys are super early. Then we would expect sort of the volumes to be picking up a lot, but the volumes in options full stop is very different to perps, and I've got some stats to share with you guys on that actually in a bit later in the call. Question: you'll need PLP for public beta? Yes, we have to have public beta will be live, and yeah, and we're also pushing to have the stats page live as well for public beta, so that there's a live dashboard and everybody can see what's going on. No, there's no news. No, we're still discussing with one other party. Yeah, so kind of horse trading on that. I don't need to go into like massive detail, but CEX yeah, CEX deals are like most things in this industry. The amount of value you're going to get from it, you've got to take the risk and guess, and the costs can vary quite significantly as well. So yeah, so we're treading that path very carefully. We can only spend money once, so we've got to be very careful. But conversation's still going on. There was a question here. So I made a suggestion to reopen the pre-sale NFT for only those who already purchased them. Yeah, we've decided not to do that, and the I think look the just to give some context, the reason we created such a time pressure before is because we were planning to IDO in June. That obviously was pushed back a significant period, so the situation has changed. Um, we had numerous people ask the question and say, look, can we open up the pre-sale NFTs? We'll be interested in getting some more, or trying to get some because I missed it or whatever. And so we were getting asked the question. It wasn't really in our line of sight. We we then looked at it and thought, well, actually, you've got quite a bit of time until the pre-sale, and if there's appetite and people want to do it, and actually, we're not, if for instance 100 were bought in a flash sale, then that would be 100 a less that would be going into the standard pre-sale. So therefore, you would have more tokens, and our tokenomics, which we're going to talk about in a bit, would be even stronger and more bullish. So great for the business, makes perfect sense. Few people very emotional about it. Felt there was statements like it was a kick in the balls to people that had already bought them, and even people that hadn't bought them were upset about it. And so it doesn't make or break us either way. And we're responding to requests, and it was a logical step that we thought was worth exploring because it's good for the organization. But we could just do without the hysteria, to be honest, because we're far too busy trying to launch one of the most ambitious decentralized trading platforms ever, and get it out the door. So we just yeah. So that's me opening up a little bit and kind of giving a detailed response to the question. Yes, absolutely, absolutely. You can deposit $1, $1 million. There's no, it's not selective, and that's one of the reasons we're adding PLP plus. Or I don't want to fully confirm it yet, but that's why our ambition is to add PLP plus as well, because it creates a bit of a burning platform. Because there's what many other platforms do, and I'll talk about this a little bit in a bit when I talk about tokenomics, is they use several different systems, which basically create dilution of their native token, to drive short-term incentives. One of those typically is PLP incentives. So they'll say, if you're in the first million in the PLP, then we'll guarantee you, 2% a month or something like that. But obviously, you can't create money out of thin air, right? And so typically that comes from sort of distribution of tokens and emissions of new tokens, which then dilutes the value. And there's a couple of other things that it is very standard for protocols to do. We're not doing that. What we're doing is we're designing a platform that we feel comfortable that people will be happy to use, and we will invest in marketing to drive sort of traffic to the platform. And actually, what we want to do is deliver the best long term growth. And we think a combination of PLP and PLP plus, that model that anyone who's been in MDB quite familiar with, is a way of combining two value streams actually that are independent of each other to deliver APY and an LP that's different level. Certainly even GMX are a little bit of a victim of their own success, because they've got so much liquidity. The utilization some days is like 5%, whereas I would much rather have 5 million in the liquidity pool and do 10 million a day in volume than have 50 million in the liquidity pool and do 20 million a day in volume. Whilst because I think if you've got the volume, you can go out and find more liquidity. There are deals that you can do with certain organisations, but if you've got a lot of liquidity and not a lot of volume, it's a low volume market at the moment, then you potentially in a position where it's not attractive to be in that LP. So hopefully that answers the question. But yeah, it's absolutely open to anyone. There will be, obviously, we're actually going to do, if we do PLP plus, we will also do a whitelist process for that as well. Yes, there'll be an opportunity to get in early, and then anybody that wants to put more in will naturally want to try and be as early as possible. No, simple answer. No. Yeah, it's always challenging, right? Because I think when you're, well, I've never been involved in a project in my life that ran on time and on budget, and I've kind of been around the block a few times. But you get to a point where you have to really choose. What are the few battles? And for us at the moment to get into a position where we're in public beta, and then that allows us to breathe and then focus on the rest of beta, and then moving towards the IDO at the end of September, then really what's key is having the UI giving information, so stats and things like that, having perps live, having the PLP live, and then also having the APIs is also super critical, and then having the affiliate system functional and pumping. So prioritizing those things, and the other things will be kind of added step by step. Cool. So I'm just checking. There's a lot of comments. A lot of comments. Yeah, very good. Very good. Uh, um, okay, so sorry, just checking on notes. So I think it's over to you now, Frido. Social share winner, the fun bit of the call every week. I can see it. I can see it. Very good. Always nice. Not that there's favourites around here, obviously, but it's always nice to see a winner. That's somebody that's kind of in the community a lot, really active, and is also a private beta tester as well, and all over it like a rash. So yeah, really happy to see that win. Very good, very good. Right, moving on to the next thing. Just yes, he is actually. Nobody's perfect. Um, Yeah, so just a little bit of a marketing update. So no Alice today on the call, and she's got some time off today. But yeah, just a bit of an update. There isn't. It's really difficult because we have a lot of stuff in the pipe, and I shared with somebody earlier on today, and they were quite surprised. They were like, "Wow, you're doing all this stuff." And it's very difficult because you guys, we want to tell you guys everything, but we also, um, you know, we're also not in the business of coaching, the market on what they should do and what their marketing plan should look like. So, but I can give you a little bit of a tidbit. So, we've got three things that are kicking off this week. One of them that I can share with you is an ads campaign that will be beginning end of this week, and it will be covering about 25 platforms across DeFi, and it will run initially for a month. We can also track interactions of wallets, click throughs. It's really in depth actually, so we can see the performance of those ads, and it will run for a month. Obviously, we'll assess at the end of the month, but the expectation is that it will deliver around 2 million impressions actually on the Foxify brand over the next 4 weeks. And that's one of three things that are kicking off this week, by the way. And that's probably three things out of the 21 things that are kicking off over the next few weeks. There's a really critical period, it's about 3 weeks leading up to your IDO as well. And that's when you'll start to see we'll probably start maybe next week with partner AMAs, and then you'll see around 2 weeks after that, the AMA schedule will start to go really mad, and you'll see us doing all sorts of AMAs with different KOLs, influencers, and you'll start to see the Foxify brand, yeah, in that sort of like 3 week period leading up to the IDO, as well as this other stuff which is more sort of platform focused. Yeah, so there's plenty going on. Quick question, actually. So we're going to move into talking about Foxify tokenomics, because actually we've already got through 40 minutes of today's session, so we're going to have to move fairly quickly. I am interested in getting some comments from you guys. There's a couple of key topics. I've really enjoyed preparing to talk about our tokenomics today, and I think when I think about our platform, I see it really simply. I'm like, at the top of it, we're going for this user experience through Optatrade, which makes it very accessible for people. You've got first of its kind peer-to-peer options. You've got perpetuals, 50x leverage, very dynamic in terms of the liquidity provision is completely unique. Nobody else is doing it. And then a couple of other features as well. And it's also designed to be very scalable. The and then you've got liquidity providers. So there's a product there for liquidity providers, and then you've got token. So people that like buying tokens and speculating on that, or just holding them and staking it. It's a utility token where they can earn, and also there'll be some governance later on down the line. So, but I see all of that really clearly. But there's really probably four really key value propositions, and so we're going to talk a bit about the token today and the part that plays in the ecosystem. I'd be interested if we did another focus session next week. If we took sort of 20 minutes, what is the particular topic that people would like to see? Maybe we could put out a poll, maybe later today, Frido, on the next topic that people. And I think doing we can go into a deep dive on options. We can do a deep dive on perpetuals. We can do a deep dive on user experience, and we can do a deep dive on PLP. And I think it'd be good to do one of those each over the next 4 weeks. So yeah, let us know what you think. Which one would you like to see first? Maybe PLP might be from a timing point of view, but I don't want to kind of guide everybody in a certain direction. Um, Sorry, I didn't hear all of that. You've got options, perps. PLP, and user experience. Cool. Yeah, but we'll put out a poll. It'd be interesting. It doesn't mean that we'll do it, but it'd be good to get some feedback anyway. Uh, okay, so moving on, we're going to talk. So to close out today, we're going to talk about very few questions, by the way, a lot of comments, and is paper trade? Great question. Is paper trading still being deployed? Absolutely, absolutely. We've got it's a bit tricky with options. We very easy actually. We've already got in well, I suppose technically speaking, we already have the options paper trading, and we could push it out. However, we foresee um, because the construct of the options, you're relying on people interacting with each other, and because there isn't any money on the line, there's always a chance that people could do some really stupid things because they just want to, well, Jesus Christ, look around the average Discord server. There's always some characters, and that could then ruin the experience for other people who are trying to replicate a very real experience. So we're working on some sort of like structures around that. However, the perp system that we're basically using right now in private beta is on testnet, and as soon as basically as soon as we move into public beta, then that will then become our paper trading application. So yeah, it's still being deployed, still very close actually, and yeah, still coming. So good question. Cool. So bear with me a second because I need to. I was going to share my screen actually, but I've got yeah, I've got some notes also that I need to have on my screen that I need to. Mm, mm, mm. Yeah, I do have. Yeah. Oh wow. Wow. It's not the amount of screens you have; it's what you do with it that counts. Yeah, it's what people with only one screen say. Um, uh, so as always, come on. Who has the most screens? Come on, Matthew. Matthew time. Uh, cool. So look, I'm going to go through. So we're going to go through starting off from what is the token, and then run through the fee flow, how the protocol earns from this fee flow, how this squeezes supply through buy pressure and accumulation, and how our supply is managed actually versus the market standard. So I'll share my screen for a bit, and I'll drop some images to sort of to sort of punctuate some of the points. We'll talk about distribution and vesting schedules as well, and then I want to talk about some key numbers actually around the token. And these numbers are like really accurate. We've been running through them today with our FD, the financial model that we're developing, and it is insane. Honestly, if I wasn't running this project, I would be aping this project because the way that we've designed the tokenomics is so yeah, it's perfectly designed to protect people that invest in the project, and also provide the best opportunity for long term growth. Miles ahead of anything else that's out there, actually, miles and miles ahead of anything else that's out there. So I'll share some numbers as well. First thing I want to share actually. So we've been doing some. We're always doing market research. To be honest, we've got uh, no end of data of looking at various different things like DAOs and platforms. And one of the if I step back slightly, actually, one of the one of the one of the one of the I suppose driving forces or the hypothesis behind what we're doing with the options and also perps was that perps is very well developed, right? And it's always being innovated, and there's lots of players. I think if you go on to DeFi Llama today, I think you will have. I think it's 146. I think 146 uh, perps trading platform. Sorry, I'm trying to look for some data. The Sorry, bear with me 2 seconds. I need to find. This is not very professional. I need some numbers to help me. Bear with me 2 seconds. I will be 2 seconds. Bear with me. Bear with me. I'll give you some specific numbers. Sorry if this is boring. If it is boring for anyone, they can, I don't want anybody to feel like they're being held hostage. But I think this is interesting. I think this is the part that's always smoothed over, and I think I could be quite cynical at times, but I think this is probably one of the areas where uh, I'm sure they won't mind telling us. So bear with me a second. There we go. Right. So I've got my data. Um, People saying it's boring now. Cool. Yeah, so there's 147 perps platforms out there, right? And there is 41 options platforms out there. Um, let's do a quick quiz actually. I'm gonna do this super quick. So, what's the total TVL of all of the perps platforms? Quick guess. Have a little guess in the chat. All right. Wait, we come here with it. So it's $1.308 billion, right? That's and nearly half of that actually sits in GMX, interestingly enough. Um, but the and what's the total TVL of all options? Remember, we don't have, we I suppose could report a TVL with maybe liquidity that are on options and maybe token lock staking, but most option platforms work in the same way, whereas they're kind of peer-to-pool models, similar to perps. Ours is different, but yeah. So 1.308 billion dollars. What's the total TVL of options platforms in DeFi? Guys, yeah. So I'll call it real 100 million. It's 109 million. That's worlds away, like worlds and worlds away. Not even. It's around 8% in terms of TVL. Yeah. Um, Now, if you then look at yeah, and then if you then look at fees and you look at volumes, right? So if you look at the the annual volume of the largest player in perps for decentralized. And again, sorry if this is boring. I think this is really interesting stuff, right? And this is the sort of analysis that we're doing in the background when we're sort of planning the business and the strategy. So the top player is GMX, has $77 billion of volume in the last 12 months, right? So huge, absolutely huge. Um, so the top player um, in options, which is options with leverage as well, remember, because it's peer to pool, is Lira, and they have $418 million. So it's over 160 times the size. The largest perps versus the largest options. And in terms of how that works in fees, the largest fee take from a perps platform in the last 12 months is $131 million. Yeah. Well, there you go. You got your answer, mine and nine, right on time. $131 million in the last 12 months. On options, the largest player, Dopex, took 800 in terms of fees, took $889,000. Yeah. So when you're saying at the start, oh, what's our fees? We condition to these huge perks numbers. Options is a very different ball game, and what's the reason for that? So when we look at if you have an Axie, which I had it today, but we've been preparing it in the background, so I don't have it ready. It's not in the state I can share it at the moment, but we've got an Axie where we look at total market available, total available market, and then we look at progression in DeFi. And you see perps is much further along the line, but then there's a big gap. And the gap, as we see it, is user experience. Right? There's also many other reasons, right? I think market control and all those things. But user experience is by far the biggest gap. Albeit perps has moved in decentralized finance, has moved a long way along a long way across how much total available market there is, but there's still a lot more to go. It could easily 10x, right? When you look at options, it's a tiny percentage of the total available market. If you look at say like CFI options, for instance, it's around 7.6. Sorry, it's about $1 trillion is traded in CFI options in terms of volume. So there's huge numbers. And remember that the volumes in sorry, that's TVL. The TVL is 1.3 billion in perps. Actually, there's $1 trillion of volume out there in options, and the amount of that available market that's been achieved within from options platforms is very small, like much smaller, right? Like the fee take is from the leading player on either side is less than 3% on the option side of those on the perp side. So there's something else, right? That isn't just about user experience. And our view is that options is just too complex. I think one of my biggest learnings of this industry is probably overestimating the average investor within DeFi, and I think you could easily overestimate the average trader as well, right? And so what we see is this huge gap, which is the difference between where the market is in terms of their capability level, comfort level, from a technical standpoint, and then where the platforms are. And if anyone wants to go and look at another options platform, it doesn't scare me in the slightest if our customers go and look at them. Honestly, you need like a PhD in physics just to understand what's going on. And for me, that just isn't scalable. So yeah, I thought I'd share those. I think they're super interesting numbers. So really, I think that means that we've got kind of a double-edged sword of options, and we always knew that, which is why we made the strategic decision in our V1 plan. We never actually had perps. If you didn't know that, it's a little bit of alpha for you. And we looked at the market strategically, and we were like, oh, hang on a second, we can really disrupt the option space. However, there isn't a huge pie that you can. If you can take a small slice of it, then you'll be very happy. If we take a small slice of perps, we'll be very happy, and we can revolutionize the way options is seen within DeFi as well. So that's sort of the double-edged sword with options as we see it, is that you don't have this pie where you can just take a sliver of it, because nobody else so far has been able to build and execute something that has been appealing to mass markets, and that's what we're doing with Foxify options, of course. So that provides us sort of that first mover advantage, but it also means that we have to be the one that kind of creates that new and much bigger market. It does also mean that we can move up the rankings fairly quickly. I think you only got to get down to say top 10 on the options leaderboard, and you're already getting down to like $25,000 a day in terms of daily volume. So options very different in terms of volume and fees, but I think we have an opportunity to get up at the top end of that and even revolutionise the way options is done within DeFi. So hopefully that's interesting. You don't have to sort of like play to my ego. If people think, look, this is a waste of time, feel free to say. So I think it's super interesting personally though. So in terms of the token then, so what is the token? So Foxify token, I'm going to speed up a little bit because we are starting to run out of time. So Foxify token is a utility token. It has two functions. So first function, well, I suppose it has three functions. You can buy it and speculate on the open market in terms of its value. You can buy it and then stake, and you earn a share of the combined trading fees, which I'll walk through that flow in a second. And you can also use it for governance. So if you've got lots of it, then you can have a big influence on decision making within the protocol when we launch the governance site as well. So yeah, there's three functions there as well. I'm just going to share my screen. Kenny, please do not mention what I think you're going to mention. I think Kenny must be an alt, right? It's got to be. So I just want to. Can you guys see my screen now? Yeah, you can see it. Okay, good. So so just doxed myself. You can see, look, E for Danny. So the cat is out of the bag. So we've got thumbs up from other people. Just checking they can see the screen before I start walking through this. Right, so what about? Okay, well, I'll tell you what I'll do. Oh, would you be able to just take a screenshot of this and just drop it into the chat for us? I've got something on my snippet and I don't want to lose it. So whilst Frido's doing that, I'll start talking through, and people will be able to see what I'm talking about. So, if you think about this is the flow of how fees will move through the system for Foxify. So, on the left hand side, so left of these two arrows, which are kind of pointing, one's pointing in Foxify and one's pointing, and it says auto stake to the left hand side of that. That's perpetuals fees. And then on the right hand side, you've got options fees coming in at the top, combined income, you've got affiliate and rewards, and then staking pool. So if we start on the left hand side, if we think about perpetuals and options, effectively two different trading platforms with a user experience and our our affiliate system, all of those things over the top, but it's fundamentally two different trading platforms actually, all under one brand. So you've got so trading fees will be taken when somebody opens a trade, somebody closes a trade. You also have a spread, and those fees are taken, and then those fees are split in three ways at that point. So if I don't know, if there's $100 in fees, we have, first of all, most of the fees will go to liquidity providers. So people that provide liquidity, the liquidity will go into the Perps LP as an ETF, and that ETF is USDC, Bitcoin, and Ethereum. Very, we have to be very open about this. If you're going to have Bitcoin and Ethereum in that ETF, then it can go down and it can go up, right? The reason we've chosen this mix is because we're obviously very bullish on the long-term prospects of Bitcoin and Ethereum. However, we also appreciate that short-term volatility cause a bit of seasickness for some people, and so having it heavily hedged towards USDC means it flattens out. It means that when Bitcoin 3x's and Ethereum does the same, it means that you'd get 1.5x ish in terms of the value of that ETF going up. But it also means that Bitcoin and Ethereum drop 20%, that you'd only actually see 10% coming off of the ETF value. It does pay to liquidity providers. So when you deposit into the PLP, you're effectively minting a PLP token, and the value of that PLP token will start at $1, and we want to see that value going up and up and up. And you can just sell some of your PLP tokens, so you redeem them, and you will get USDC, Bitcoin, and Ethereum out. So effectively, for providing liquidity, you're earning in Bitcoin, Ethereum, and USDC. Now that's a variable number. I think in the contract it'll be set between 50s, the low end, and 75%. Why would you have a variable number? Because actually, depth of liquidity is important, because you can take more volume if you've got deeper liquidity, but also utilization is really, really important. As I mentioned before, if you look at GMX at the moment, some days they've got 5% utilization. They've almost got too much liquidity for the current market. And because a lot of people are building on top of them, it's just bringing in more and more liquidity. Actually, their utilization is a little bit of a struggle. So whilst they're making lots of fees at the top end, it means that the APRs are very low. And we've seen that even with others. If you look at Vela, who have launched recently, the guys have done a fantastic job. Actually, the utilization, I think it's started to improve now, but the utilization wasn't great at first. It's started to improve now, and I think their liquidity dropped a lot. I think on beta they had like 50 million liquidity, which is huge for a new protocol. But that's now, I think, dropped down into the teens, so they're maybe getting a bit better utilization. But yeah, so to be clear, like the amount you need liquidity and you want lots of it, you definitely need millions of dollars of liquidity. But at the same time, utilization is really important. There's no point in having $30 million of liquidity and only having $3 million a day of trading volume. So it can hurt you if it goes the other way as well. But if you only have $500,000 of liquidity, then your trading volume potential is severely limited as well. So it's a real balance in that. So that's the reason it's variable, because maybe if we've got lots of liquidity and lower volume, if we've got if we've got um, if we've got very high utilization, then and so therefore the APY is very high, then what we might do is just reduce that slightly and allow some more of the fees to go into the system. However, if the utilization is low, what we don't want to do is have liquidity flights, and then it makes sense to up that percentage to incentivize not only people to stay in the pool but more liquidity to come in. Um, the services fees is just a fee directly to the organisation for contributing towards overheads, and then the rest of it, borrow fees, everything, all everything that's left that doesn't go to either of these two directions, then follows this Foxify arrow and goes into the combined income pot here. In the combined income pot, you'll also get the fees from trading, from options trading. So you'll get whatever's left from perps that hasn't gone to services and liquidity providers, and you'll also get the options trading combined into that pot. So this is a unique scenario because we are the only trading platform out there that has peer-to-peer options like this, and also decentralized perpetuals trading as well. So affiliates, our affiliate number is very generous, especially for official affiliates, and affiliates will be paid from. That's why we say net fees, because they would be paid from combined income. So if there's $100 of fees that comes from me, obviously paying 30% of that and then paying 70% of that to a liquidity provider, all of a sudden we're paying people to trade, and that won't work. So the affiliate and the rewards, so rewards, i.e., we can take 3% of the combined income pot and we can use that for rewards, so like trading competitions, incentives for new traders, and so on. Then that will drive it. So we're also looking at like a voucher system at the moment, that's currently in specification. And that voucher system, for instance, we might be able to take rewards and say, do you know, like free trade Fridays, but much more automated. So people can come along, connect their wallet, and have to meet a certain criteria. So maybe they've used other trading platforms, held competitor tokens, or maybe we can give out, vouchers, and that's how they would be incentivized from that pot. Because obviously what we all want is more volume and new users, basically. Um, and then whatever's left after that, then goes into the Foxify staking pool, and but it goes in as USDC. So this arrow here, if you can see my screen at the moment, everything that goes here, this arrow is USDC, and half of it has to become Foxified tokens, right? And how does it? We're not. I'll show you something in a second where you can see the standard model for tokenomics within decentralized trading platforms. It's pretty shocking, to be honest. I don't want to. I've kept any names off of it because I don't want to kick anyone personally, but it is the standard across the industry. And so typically, what they'll do is they'll just they'll have a pot of tokens, or they'll mint new tokens, which is just all dilution, right? What we'll be doing is our system will be it'll be swapping USDC for Foxify tokens. So if there was $50,000 today coming into this pot, then $25,000 would have to buy Foxify on the open market. Obviously, we'll work to do that in the most efficient way possible, and then distribute the USDC and Foxify. And this is also how the Foxify as a business earns its income. So you notice on the distribution, over 50% of supply is owned by the protocol, and that would just be put in the staking pool. And that's how Foxify as an organization earns. And this auto stake is really just because you might buy the Foxify token, you stake it, you're earning, and you can choose to auto stake some of your earnings into the PLP. Cool. I can't see the chat at the moment, Frido. So if there's any questions, feel free to chuck them out. What's the question? Yeah. So leverage liquidity allows you to use to basically to use a vault to deposit LP tokens, um, that you can then use as a deposit for PLP whilst it's also being farmed at the same time. So if I had ETH USDC, for instance, very stable pair, relatively speaking in crypto terms, and it's earning me 23% a year, I can take it out, put it into a vault. The vault will stake it for me back into the farm, but then I'll also be able to provide use that liquidity as a deposit in the PLP at the same time, which would, the PLP is paying me 24%, and my farm's paying me 23%. I'm now getting 47% for the same liquidity. Hopefully that answers the question. So we'll be adding leverage liquidity during public beta, and we'll be doing a lot more. Yeah, maybe when we do, trying to think, we will do a deep dive session on leverage liquidity and the vault systems, because we're using a vault system as well within the perps. I think the liquidity system, it also uses an automated trading system to manage the ETF. So just a little snippet. So the data shows a 6%. Basically, the ETF will outperform those assets if they were just sat there in a wallet by 6% annually, which then provides additional APY. Where you've got some platforms, for instance, even like GMX, and it's not calling them out, it's a fantastic team and product. But in reality, some days they're at like 3-4% APY in their PLP. And if we get it right, the reason we designed it this way is because not only do you have the upside potential of Bitcoin and ETH in the ETF, but also you can leverage that technology to add another 6%. So if you're adding 6.6%, and then you're adding 22% organically, and then you've got it in PLP plus, and you've got, there's like 3 or 4 ways to combine earnings through the liquidity mechanism. Really innovative. It's very hard for perps platforms um, to keep the APR high. And the way they do it typically is by minting new tokens and giving them to liquidity providers, which then dilutes their value. And that's why you see their token price struggling, because they just use their token as like this free thing to hand out. We are not doing that. We want our token to be a store of value. And the reason we're able to do that is because we found very innovative ways to create value for the LP, which means that we don't have to then sacrifice the token holders and investors just to make sure that we can attract liquidity. That's the theory anyway. Yeah. Yeah, in the image, we need to change the image. Actually, we did toy with the idea of having a couple of ETFs, and we still could do that, but at the moment we're just, we've made our life complicated enough with how ambitious the project is. So we're just going to stick with the one ETF, and we can always review that later on. Cool. You can't see my screen now, no? Okay. Yeah, just want to double check that before I start bringing up my notes. This kill Virgil, kill Virgil. Yeah. Um, cool. So yeah. So actually, what I'm going to do is just go back very quickly, and it's perfect timing actually, I think, to share the next point. So I'm just going to go back. Um, mm, mm, Sorry, apologies. Where that's gone. Cool. You should be able to see my screen again now. Yeah. Okay. Sorry. Apologies. Telling me the stream ended. Good. Can you see it now? Yeah. So if you look at the way, we'll talk about distribution in a moment. If you look at the way the tokenomics are designed for Foxify, if you want to control the income of Foxify, or largely control the income of Foxify, which any business wants to control its own income, right? That's an absolute no-brainer. And you want more of the tokens. Now, where's the motivation to acquire more of the tokens and a larger share of the future success of the business if that business is just going to keep minting more tokens out of thin air? Yeah. So, um, so what we've done, and this is very intentional, is we've created a scenario where there is a maximum supply is limited. There'll always be some, I suppose, organic, I suppose, locking up of supply by people maybe just not tending to their wallets. But also at the same time, obviously, MDB is one of our large investors. Will own a big chunk of Foxify tokens, which he'll be staking, and is interested in acquiring more of that if it makes financial sense to do so. And at the same time the Foxify platform itself. So you imagine if, if $50,000 pops in during this arrow, 25,000 Foxify has to be bought, and there's $25,000 of USDC then distributed out to the staking pool. You've got a choice to auto compound that. You could auto stake it, then it would liquidate those two assets to then stake into the PLP. So that would be, you basically be selling to buy. Or as an organization, what we're interested in doing is trying to get as much of that supply back as humanly possible. So there could be scenarios where we're receiving fees from our staking pool, and we're just liquidating those because that's our income and that's how we cover overheads. That's the worst case scenario, is that the platform is buying from the open market and then it gets resold again. And that's the worst case scenario. What's likely to happen is in periods where we don't need the income, it's not specifically required, it makes financial sense to acquire a bigger percentage of the supply, which gives you much better future potential. So if you're going out to institutional investors, for instance, and they give you large sums of money, and you're gonna put that money into marketing and driving users and fees and so on, then you want to make sure that you're going to get the largest share of that. So certainly in this type of market as well, it's absolutely in Foxify's interest to acquire more of its own supply, which is naturally then creating a squeeze. So not only is the tokenomics very tight and the distribution is very tight, at the same time there's this natural squeeze because as an organization we want more of it, which means there's less on the open market to be sold. Very different to anything else that you would see. Other platforms would typically, and I was snapshotted earlier actually. um, that's not right. I'm about to share a Google link. This is a real image from a Perps platform. This isn't made up. This is, I wouldn't name them, and it doesn't matter who it is because this is not unusual. It's not unusual in this industry because rather than innovating around liquidity provision, finding other ways of creating long-term value is just very easy. And don't get me wrong, also, it's easy to be judgmental of others, but there is certain ways that people within this industry respond to things, and quite often it's in a short-term manner, and we're thinking very long-term. So you can see here, these guys are starting off at 10 million tokens in circulation, and then they're capping out. So over 15 years, then 5x the supply, and you can see that does flatten out a bit, but it's very aggressive over the first couple of years. So they're going to 2.5 times their supply between 2023 and 2026. So really, really aggressive. So when you're getting in here, it all feels good, but the further this line goes up, it starts to get much more challenging, and that's because they want to pay out rewards, incentives, advisors. And there's a million different reasons of why they want to do this. Quite often, it's providing incentives to liquidity providers as well, which then starts to it basically dilutes the supply of the token, right? Whereas you won't see this in ours. In fact, what you'll see with ours is the opposite. Everything is on the open. Sorry, there's a very small amount will be on the open market when we launch. That will increase, and it only reaches about 35%. I'll share some numbers with you in a second. And then it in real terms is then decreasing. I'm moving my mouse across the screen as if everyone can see my screen, but they can't. But maybe you can imagine that there'll be this jump up, a release of tokens over the first year as our vesting happens, and then a real kind of drop. Maybe what we'll do is we'll overlay. I think it'd be good marketing. Maybe we overlay our own tokenomics versus this, because this is the standard within Perps, and we're completely bucking the trend. to do something that's very different. I can share some numbers to back that up. Appreciate everybody's been on the call a long, long time. So um, in terms of distribution within the white paper, you can see distribution. There's no emissions. Everything is vested. Absolutely everyone is vested. There's market maker tokens, um, but apart from that, absolutely everything is vested. There'll be a little bit of loose supply for like incentivizing farms on dexes and things like that. Otherwise, if you're pre-sale, if you're private sale, if you're team, doesn't matter who you are, everything is absolutely vested. Now, the real impact of this, not only is there no emissions, as you can see, we've got competitors that are 5x in their supply over the next 15 years. We will be 0x in our supply. We'll actually be accumulating supply off the market and trying to hold on to that as long as it's financially viable. And and um, yeah, in addition to that, you'll see most of our supply is actually going to be locked long term. So to give you the key numbers to finish with, so our starting FTV will be 9.5 million at a price of 80 cents. The amount actually circulating on launch day, and most of that will come from pre-salers because pre-salers will get a 30% drop instantly, and then the other 70% will vest over 4 months. So still actually very, very sensible versus a lot of pre-sales. Circulating percentage slash value on launch day will be 4.5% of supply will be on the market or circulating in people's wallets on launch day. So $427,500 to be exact. After 1 month, so 30 days after the token has launched, there will still only be 7.21% of supply on the market and $684,000 worth of tokens after a month in a project that's got a 9.5 million FTV. And then after 12 months, after a year, there'll still only be 37.42%, $3.5 million will be vested over the first year. But launch day, very, very, very little. And so you can have absolute, and the reason we wanted to do that is because if you're doing a pre-sale that's vested, you want people to have confidence that they're going to be having a good time when their tokens are vesting, and obviously with only 4.5% of supply even being circulating on launch day, then it should be very interesting. And the linear vesting schedule also works in a way where tokens are vesting out rather than in chunks; they're vesting out continuously. So if somebody has $100,000 worth of tokens, it will be they would be getting somewhere in the region of about $250 a day, right? Um, and hold me to that. Yeah, so about that, a little bit more maybe. Whereas if somebody's got $500 and they're vesting over 4 months, say for instance, then you're not going to go and claim those every single day. So you might, on a Friday, you claim your vested tokens, and you may, but actually when you go to claim, because they are going to be staked as well, you'll see that you've already earned some USDC from your tokens and some additional Foxify tokens, creating that squeeze that we talked about. And you might decide just to leave them there. But if you do decide to claim and sell them, just not going to be having huge sell pressure on the chart. So you can be vested uh, in it, having a lot of confidence that it's you're not going to be watching all the action happen and missing out. It's actually going to create this scenario where there's actually this compound effect of squeeze on supply. So I did say I would go. It would be a tokenomics special. Um, I 37.42. Let me check that. That's just from memory. Yeah, 37.42. Yeah, so 4.5% on launch day, 7.21 after 1 month, and only 37.42 after 12 months. Good. Right. Well, I've run out of time. We've gone on for like an hour and 20 minutes today. We thought it'd be a bit quicker than that. So apologies if it's dragged on. I think we lost. I managed to lose 10 people during the tokenomics special. So yeah. So sorry if it was a bit boring. Good stuff. All right. Cheers, guys. Okay. Bye.